Hi, everyone. Thank you for joining us today. I'm Marcia Butler, the Webinar Director at Advice Chaser. Before we introduce our guests and get started, I need to do a bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. We're thrilled to bring you today's educational presentation. Attendees are muted, but we do encourage you to ask questions using the chat box, and the presenters will answer those queries during or after the webinar today as appropriate. If you ask a question in the chat box, go ahead and leave your phone number as well. If we can't get to your question during the event, we'll make sure someone reaches out to you after today's webinar. We want this experience to be as educational as possible. So again, please don't hesitate to ask for clarification or expansion of the material. I'd like to introduce you to our panelists today. Sean McElderry is our moderator today, and he is the CEO and founder of Monarch Wealth and Retirement Strategies. He is a certified financial fiduciary and has 22 years of experience in the financial services industry. As financial professionals, Sean and his team are committed to helping people create solutions for their retirement assets. Once they understand risk tolerance, time horizon, and goals, they work to develop a program that carefully balances investment strategies with preserving principal. Sean, why don't you go ahead and say hello so people can see you?
Hi, everyone. Thank you for attending today. Hope we can provide some info to help make this helpful in your time, and look forward to any questions. I'll help answer those for you with Carly.
Thank you so much. Our presenter today is Carly Chauhan, a certified public accountant and a partner at the LSC Group, LLC. She earned her bachelor's and master's from the University of Miami School of Business. And many people have so much going on that they don't really focus on their tax and financial planning needs. Carly and her team find solutions that will allow you to achieve your tax and financial goals, allowing you to spend more time doing what you enjoy without having to worry about your tax future. And Carly, we're so glad to have you back. I know I've enjoyed all of our webinars that we've done with you, and I'm really looking forward to this one. So I'll go ahead and turn the time over to you.
Marcia, thank you so much. And I have also enjoyed being a part of this dynamic trio. The purpose of today's webinar is, as Sean mentioned, to be as informative and as helpful as possible, but it's also to try and make tax season a little less daunting for you, the taxpayer, and hopefully for your CPA, a little selfishly as well. So I kind of created this webinar into 3 parts. So the first part will be kind of what to do before you meet with your CPA or your tax preparer. So obviously, get those tax documents together, get your W-2s, get your 1099s, any of those forms that you will be receiving. They should be received by early February. Some may come a little bit later, but in the next few weeks, you should be receiving most of those tax documents. Keep in mind, they could also be amended, but again, the majority should be received shortly. And then also anybody who is involved in any S corporations, partnerships, LLCs, your K1s are coming potentially around March 15th, but remember, they may be extended and then they're not really due until September 15th. Aside from the tax forms, which are pretty easy to gather, the next piece of it is the information that is not recorded on a tax form. And I think this can be the more complicated for the taxpayer. So finding all of those medical expenses, your property taxes that were paid during the calendar year, as well as charitable donations. So, those are not reported anywhere. So make sure you are gathering those, whether it's the receipts from the charitable donation, the letters they send, or the checks that you've written, and compiling that information for your preparer. Also, if you have a rental property, whether it's an Airbnb or you have some sort of standalone property, again, make sure that you're compiling the income and the expenses for your tax preparer. Business owners, again, making sure that your bookkeeping is done through 12/31 as soon as possible. Hopefully it's already been done, because we are almost at the end of January and 1099s are due to the recipients on January 31st. So hopefully your bookkeeping is done, but in the event it's not, getting that done as soon as possible so that you are ready to go and that you have an accurate picture of your income as well as your expenses. The other thing to think about is what big changes happened in your life last year that maybe your current tax preparer doesn't know about. Did you get married or divorced, or maybe had a baby? If you moved, make sure you give, the new address information. Did you buy a house? Did you sell a house? Maybe you even started a new business. Kind of going back and thinking of all of the big events that happened during the year and making sure that you've, maybe notated them so you remember to discuss all of those, again, with your CPA, your preparer. So now it's, maybe you're sitting down and meeting with your CPA, or you're having a Zoom, or even just, having a phone call. Kind of some tips on things to remember while you're meeting with this person. Even though we're at the beginning of the year and we're working on the prior year's return, there are still some potential after year-end tax planning opportunities that you can still take advantage of. So the biggest one is going to be those retirement plan contributions. The traditional and the Roth IRAs, again, those have the April 15th due date. There is no extension on those. Your SEP IRA, those are for the self-employed folks. Maybe they have an opportunity to open or contribute to a plan. Those do have an extended due date, so you may even have additional time. There are also other retirement plans out there that you may be qualified for, and due to some recent changes in the law, you still may be able to open that account, make contributions, and get a deduction for 2022. So speak to your CPA, speak to your tax preparer, maybe even reach out to a retirement plan specialist and see if those, are good options for you and your business. Another big one, the home office. Most of us are still at least working part-time from your home. Now, again, depending on what your situation is with your employer or your business structure, this may not be an option for you. However, it is something to discuss with your CPA. And if you do have a dedicated office space that you use exclusively for your business, you may be able to deduct part of your home, part of your apartment, and the various expenses associated with that space against your business income. HSA is another one, similar to retirement plan contributions. So the HSA is for the high deductible plans out there, the health insurance plans, and these are health savings accounts where you may be able to make a contribution to these plans in order to pay some of those expenses, medical expenses. So again, something to think about, talk about. If your plan qualifies, if you, if this makes sense for you, this is a conversation to have. Another big hot topic is foreign bank accounts and cryptocurrency. With the foreign bank accounts, if you have a foreign bank account out there, even if you haven't touched it, you may have a disclosure or a filing requirement on your 22 income tax return. If you bought or sold any cryptocurrency, again, there may be a disclosure there that you have to, put on that tax return. There is a box on the return that actually says, have you bought or sold any cryptocurrency? If your accountant isn't asking you that question, make sure you give them the correct answer. Another helpful tip is while you're sitting together, or again, while you're kind of looking at the information you've submitted, compare to last year. Maybe you forgot that you do receive a 1099 from this bank account that you don't really think about often. Or maybe you switch jobs during the year and you're going to actually have 2 W-2s this year. So it's always a good idea to maybe use an organizer or review the prior year return just to do a little comparison so that you ensure everything has been submitted, that you anticipate to your CPA. So after you meet with your CPA, potentially you go home with a to-do list, but these are some things to just kind of remember after that meeting or phone call. So the first thing is, if you are somebody who has to make estimated tax payments, I highly recommend putting them on your calendar now. April 15th, June 15th, September 15th, and January 15th. Maybe your accountant reminds you, maybe they don't, but put that on your calendar now. So at the very least, you do have that backup to remember. And maybe during your meeting, you realize there were some missed tax saving opportunities that you could have done by the end of last year, but you forgot or just didn't get brought up. So get ahead now. Put that kind of to-do list together and make sure to be a little more proactive this year. A big one is if you own a business, maybe right now or last year even, you were small and it was a startup and you were just filing as a Schedule C sole proprietor. But this year you've experienced some growth. Maybe it's time to incorporate. Maybe you have some, potential tax savings out there using a different business entity. So think about that now, discuss those items with your CPA and see if there is some potential additional savings out there. And then if you, sorry, Marche, I was just going to mention, if you did decide to file an extension this year because you maybe were missing some information, such as a K-1, as soon as it's received, please send that on to your CPA as soon as possible, just so that, your return does stay in the queue. And these are just a few best practices that I like to share with my clients, as well as, with you attendees today, just to kind of, again, hopefully make your tax season as easy, as seamless as possible. So big one here is don't wait until the last minute. As I'm sure you guys, can understand, accountants are going to get very busy as we get closer to the March 15th and April 15th deadline. So the more you can get to your accountant now, the more likely, you'll get their full attention and be able to discuss any items that may be needed. A big helpful tip, I think, is to keep contemporaneous records. Instead of spending the first 2 weeks of January going through your bank statements and going through your credit cards, if every month maybe you decide to keep track of those charitable donations or the auto mileage that you've been driving for business during the year, it'll save you a lot of time. Again, get that information to your accountant as soon as possible. Even if you don't have everything, that's okay. If you have missing everything but one item, I still recommend getting it ahead of time. They may be able to put together your return and get it ready for extension, without that. And finally, and again, little selfish plug here, please respond to your CPA's questions or emails as soon as possible. We too want to get you that refund as quickly as possible. So the quicker you can get maybe that missing information over to us, the quicker we can get your return filed and out the door.
Okay, it
All right.
looks like we do have a few questions, Marche. Do you want me to go through some of these?
Absolutely. And I have some more coming in as well.
Okay, so I have a couple here that I have. I'll start with. So one question is, if you're working with a CPA and you're basically doing an extension, is it extension in California extended this year, or is that only for people affected by, I guess, the rain? Apparently,
it is a state. It is a county by county determination. So you'll need to look and determine if your county was in the considered one of the disaster areas, you may be entitled to that additional extension of time. So you'll have to check. It's based on where you're located. Because
I think a lot of people have assumed it covers everybody. So I just wanted to make sure that was one thing.
It covers most. Let me just interject real quick. It does cover most. So I will say that. I will also say that don't wait until still, the last minute there. Try and still push for that April 15th deadline.
Okay. Here's another question. If I spent 2022 setting up a business with the LLC, DBA, social media accounts, et cetera, but was never open for business and did not engage in any type of sales transactions and earn no income, do I still need to file a tax return for the business I set up?
So I'm going to just assume that they did set up an LLC. And if you are in California, there is a single member LLC filing requirement. There is a first year moratorium as far as the $800, but I would highly recommend filing a tax return. If you don't, you probably will get a notice. You will also, you are also setting yourself up to not starting the statute of limitations in the event there is ever some sort of audit or event. But again, yes, filing a zero return is highly recommended.
Okay. Another question is, if I currently have a CPA, is there anything I can do to know if they're actually doing, in a sense, a good job or everything that I need? Is there some red flags I should look out for if I'm being overlooked in a way?
Ooh, that is a tough question. What I would say is if you are an employee, meaning if you are somebody who is a W-2 and that's the primary source of income, most likely your CPA can't do too much else for you. There's not much else to be done. But if you are a business owner or you have rental properties or you have some, I would say business owner or rental properties, the two biggest ones, and you are not meeting with your CPA more than once a year, meaning if all you're doing is speaking to them when it's tax time, you're probably not getting the enough service. So I hope that answers the question.
Okay, so then, and I'll just kind of throw a question on top of that then. So if you are a small business owner or have more complicated things, what should that look like outside of just that meeting to get your taxes done? What do you tend to say is kind of like that process, or is it a meeting for planning, that type of thing?
So aside from the tax prep, which is, again, the most obvious, I would say that the second biggest time of year is the end of the year, is doing that year-end tax planning. That is probably the most valuable time for a small business owner. But then again, so those would be the two main ones. But again, in addition to all of that, when you have a question as a small business owner, reaching out to your CPA, or if your CPA is aware of new tax law changes and is not sending out communication that this may impact you, or let's have this discussion. So that type of, what I like to say is a partnership, where it's kind of the give and take on both ends.
Okay. I appreciate all the detail on that. That's great. Can you talk a little bit about, I guess someone wants to know how brokerage accounts are taxed. I guess we're talking short, long-term cap gains. And then additionally, if you sold a home this year, what sort of tax should you expect from the sale?
So those are a little too granular in the sense that it's going to, many of those questions are potentially going to be case by case basis. I will say very generally, however, when it comes to the brokerage account, which is I think the first part of that question, it has the interest income, and it has the dividend income, and it has short-term cap gains, which are typically taxed at your ordinary tax rate. And then there's also the qualified dividends, and then the long-term capital gains, which are taxed, and this is federal I'm talking about, federal, they're taxed at the capital gain rates, which are preferential. And again, it is done on a bracket basis. So part of those long-term is 0, part of it is 15, and part of it is 20. Again, nothing can be straightforward in the tax law. So again, depends on other sources of income, depends on if you have losses, but that's the very general high level piece. As far as selling your home is concerned, you take the sales price, you subtract the selling expenses, you subtract the improvements you made, you subtract the purchase price of the home. That's what you end up as your potential taxable gain. If you've lived in the home for 2 of the past 5 years, and it's your primary residence, if you're single, you have a potential $250,000 exclusion. If you're married, you have a potential $500,000 exclusion. So potentially there is no gain on that sale, But again, there are facts and circumstances that should be looked into before, making any final decisions.
Okay, here's an easy one. Well, maybe not. Are paper receipts still necessary to keep?
If you're referring to, do I literally need to keep paper? The answer is no. The IRS does accept electronic copies as substantiation. So I would highly recommend taking pictures, or there's a million apps out there now where you can enter all that information and use that so that it's electronic. I know that if a client sends me something in paper, I cringe. It's almost like a 4-letter word to me. So as electronic as you can be, I would recommend.
Okay, so, and I can imagine this person might also be thinking, is using bank statements and credit cards that are showing gas bought at the local 76 station, or, they have their receipts for a meal. Are they going to actually ask for the, physical receipt to show that itemized?
No, they're not going to ask for the physical receipt. However, when you are substantiating something as a meal, eating at a restaurant and showing the receipt is not the only thing the IRS is going to, or the state is going to ask for. They're going to ask for, what's the business purpose? Who are you with? What, why was it kind of what was discussed, almost, again, the business purpose. So you don't necessarily need to document that on the bank statement, but maybe, again, using your calendar and saying, oh, I was at lunch with Sean and we discussed client XYZ. That would be substantiation to provide to the IRS, in addition to proving that you did pay that amount.
Right, and with a lot of our clients, and then going back and forth with CPAs like Carly, we always recommend for business owners that are doing a lot of that, the travels, the gifts, the gas, is like, to what she's saying, there are many apps now that you literally just plug this stuff in on the spot. And with the gas stuff, some of this is super sophisticated now, where it even goes into your QuickBooks, and you could probably explain that better, Carly, but I know that can be huge. Because when you get audited, if you do, having to go through and literally try to do this by memory, if you write it down as you go, it's much easier, obviously.
Absolutely.
Let's see, do we have any other questions? I think we covered all of them. Marcia, am I missing any?
Yeah, we have another one that just came in. Just a second. Let me go ahead and send that to you.
Don't be shy, guys, because calling your CPA right now, they're not going to call you back half the time. So you can't. Okay, is there a certain accounting software that CPAs prefer that their clients use?
I am a huge fan of QuickBooks Online. What I love about it is the ability for CPAs to have our own login, our own access. So we just have the real-time, again, access to your file. However, there are others out there. I would say QuickBooks Online is probably the most popular, but have that conversation with your CPA, and maybe they do have their own that they prefer. But I would say QuickBooks Online is probably the fan favorite.
Okay, I typically do my taxes myself every year. Do CPAs offer to look over the return to make sure it looks good? Okay.
I don't, maybe others do. Again, part of what the value that I add is, as you said, many people can prepare their own return. The preparation of the forms themselves, unless you are, pretty complicated, are not that difficult. Really what it is it's you're using a CPA because they have expertise. They have potential tax saving opportunities for you. They have the knowledge that, comes with time and studying. So again, to me, it's more of, it's not so much the preparation of the return, but it's kind of how we got there.
Yeah, and I would say, just to kind of add to that, is when you think about it, it goes hand in hand with what I do, what Carly does, is it's not so much whether you can do it, it's what you don't know that you're missing or leaving out. And if you just have a simple W-2 job and maybe a house payment and it's very basic, you're probably going to be okay. But if it's more complicated, that's where it's, because you don't keep up with the laws and all these convoluted things all the time, you might be missing out on great opportunities. It reminds me of like Section 179, which is for business owners and self-employed people, where they can purchase large items and get huge tax deductions potentially. Well, if you don't know about that, you're just going to skip right past it. And Carly, I'm sure you can think of a couple other ideas like that. But that's what I would say is think about how we're filling in the gaps for you as opposed to whether you can do it on your own. And that's a process that just looking over your taxes being done, I don't think it's fair to say that you're going to really get a full picture because the CPA is going to have to go through everything to really tell you whether you did it right. So you're really just doing it over again.
Yep, absolutely.
Okay, one more question along, and I don't have any names off the top of my head, but are there any apps that track the questions the IRS is going to ask along with saving the digital receipts? Can you name a few so we know what to look for as a comparison?
What the IRS is going to ask? No, but because again, it's going to be very unique. It's unique to each tax return. I will say that the rate of being audited is incredibly low. However, there are certain things on your return that may increase your audit risk. So the biggest one is the Schedule C sole proprietor business owner. So they, again, just because there's no real tracking per se, there's no documents that the IRS can verify. That's a big area where also fraud has been committed. So that is one area that is a hot topic. And typically it's the meals, the entertainment, the travel, office expense. Those are the kind of areas that are looked at more closely typically by, auto, that's another one, by the IRS. So making sure that whatever you're deducting, you've not only have proof of the expense itself, again, whether it's bank account or credit card activity, but also that you have substantiation for what it was and why there was a business purpose if it's not obvious.
Okay, a couple more. How long do I have to keep business expense receipts?
The rule of thumb is 7 years. But again, as I said, keeping stuff electronic, I wouldn't delete it, if you have it electronic, but the rule of thumb is 7 years.
Okay. It looks like we have one here. My husband passed away last March. Sorry about that. Will I need any special documents for tax prep this year? I received some life insurance money. How does that affect my tax amount?
So you will receive tax documents for all of that, the life insurance, everything will be reported to you. And depending on the policies, depending on your, personal situation, it'll be determined whatever tax consequences there are. Again, it's a little bit of a unique situation. There may also be a need to speak to your broker or your financial advisor for step up in basis from the date of death. Again, something to definitely speak with a professional about and see if there are some potential opportunities for you to save some income tax there.
Yeah, and also keep in mind to review your Social Security, depending on your age when you lose a spouse, because you want to have a meeting with them to make sure that that's adjusted based on, you trying to get the most in your situation, because there can be spousal benefits. So those are other things to keep in mind. So next question. Hi, Carly. We all know that CPAs have high ethics as well as licensed and certified. We also know that not all are created equal. So I'm looking for a strategist that can think outside the box and walk that line so I can maximize what I keep. How do we find a CPA like that?
Well, I think first of all, I always recommend finding a CPA from somebody you already trust. So whether it's an attorney, whether it's your financial advisor, whether it's your best friend, who do they use? So I would always say start there. As far as the walking the line, what I always say is, first and foremost, I don't work for the IRS, I work for my clients.
Oh, and you did add totally legal, of course.
Oh, of course. No, of course. That goes without saying. As you mentioned, the first line was we have ethics. What I was going to add is that we don't work for the IRS, we do work for our clients. There are black and white areas of the tax law. And again, a CPA should know those and should abide by those. However, there's also a lot of gray. And what I love about what I do is I try and stay as much in the gray as possible for my clients, being creative, being thoughtful of their particular circumstance or even the industry that they're in, or again, changing tax laws, what may or may not benefit them. But also the one thing that needs to really be kept in mind is what is the taxpayer's goals? And thinking about that, for example, I don't want to pay tax. Well, nobody does. But if you want to buy a home next year or this year and your tax return looks like trash, you're not going to get a mortgage. So it's not just thinking about what it looks like now, but kind of the impact going forward as well.
Okay, so we have a few more. Let's see. I'm going to go back to this one here. Can you talk a little about the tax implications of different business entities? That might be a little hard, but
it is a little hard. It's also it's a unique state by state situation. So speaking strictly for California, there are the different entities. For example, an LLC has a gross receipts tax, where an S corporation has a net profit at the entity level. So that is a conversation. It's pretty unique to your situation. I would speak not only with your accountant about that, but your attorney, because potentially, you need some legal protection as well, and the various entities, may lend itself better than another. So please speak with your CPA, your attorney about the specifics.
I am a new homeowner. What do I need to think about, plan in regards to paying taxes? I bought in 2022. I live in the house with housemates and will for a couple of years, and then probably use it as an investment and try to buy another home. So that's a business. Please advise.
For 2022, you're going to have some additional expenses potentially on your return, but if your housemates are paying you rent, that's going to be offset. As far as the future is concerned, I would speak with an accountant and make sure you structure it appropriately.
Okay, so I think we got through all of them here. Marche, anything I'm missing on your end?
No, I think we did, although I will say that if there are people who still have questions, you can go ahead and put them in there. Well, we got one more. Do you want to take that one more really quick?
Yeah, let's see here. Let me scroll down.
I'm a full-time employee. Do you want me to read that?
Yeah, I got it. I'm a full-time employee, getting a W-2, but I work from home and have home office setup costs, equipment, et cetera. Is there a write-off for self-employed for like this situation?
So in this situation, you're not considered self-employed because you are a W-2 employee. So unfortunately, for federal income tax purposes, you will not get any tax deduction potentially for California. What I would recommend is if you are being required to work from home, maybe reaching out to your employer and seeing if they can do some sort of reimbursement for you. That would probably be the best. That'd be more cash in your pocket. But again, unfortunately, due to the TCJA changes in late 2017, they've eliminated that benefit.
All right. Well, we're going to go ahead and wrap this up. So many great questions. I will tell our attendees, if you have more questions or if we didn't get to yours, go ahead and leave it in the comments. I will go ahead and save those, and we will get back to you after the webinar as we can get to them. So I want to thank both Sean and Carly for being here and for the organizations that have worked with us to bring you this webinar today. Thank you so much for attending. Look for an email soon with a link to the replay of this event, and you're welcome to share that replay with your friends and family. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Well, once again from Advice Chaser, thank you so much for coming. We're getting a couple thank yous in the chat to our presenter and our moderator. And we will see you at another webinar soon. Goodbye, everyone.
Thank you.
Thank you.